What is going on, Real Estate Playbook family? We're back with, I guess this would be episode 2 with Mr. Holmgren
Second
here.
time. Thanks for having me back.
Had to track you down. But essentially, guys, we wanted to do kind of just a monthly, or sorry, not a monthly, but more of a weekly update on what happened this past week in the market and how does that relate to just overall finances, but specifically to the real estate market. That's the niche we're in. We're both mortgage loan officers. So that's kind of our specialty, but we want to just kind of break down essentially what happened in the last week and what does that mean for you as maybe you're buying a home, refinancing, whatever the case may be. So what we're going to do is we're just going to go through just kind of 3 articles that are kind of big points that happened this past week and essentially break it down. But before we get on to the fun stuff, what do you got going on this weekend? I heard you got some big plans.
Poker night tonight. Wife's out of town. Gonna do a little guys' night poker. I'm currently smoking a pork butt, little pulled pork sandwiches. So
You're getting dangerous.
yeah, you know, let's
when the ladies are
let it
away,
hang loose.
the
Yeah,
men-
exactly.
the men play. So
exactly.
right on.
So yeah, just a little relaxing time. It's been a busy week, so looking forward to the weekend.
Yeah, keep me updated on the barbecue. Please do.
I will. Maybe I'll save you some.
Maybe that's like part 3, like maybe a barbecue
Okay.
channel inside the Real Estate Playbook.
Hey,
I don't know.
whatever the fans want. Let's give it to them.
All right. So article number 1, and this is all from CNBC, and I can put these links here down in the show notes so you guys can know we're not just making this stuff up here. So this past week, mortgage demand for home buyers continues to recover even with higher interest rates. And I'm going to go into a little deeper dive here. So right now, for the second week in a row, mortgage applications are up year over end for purchase applications specifically. And essentially what this article is breaking down is there's been a 40% increase in government loans for mortgage purchase applications. And just kind of as a foundation, there's different loan types. You've got agency, which is when you're selling to, right, Freddie Mac, Fannie Mae, and then you've got government, which would be FHA, VA, and I just thought that was interesting to pull out right now because that's a huge jump when you look over from last year at this time, a 40% increase on government loans, especially FHA. And essentially, just for kind of another foundation here of FHA loans, right, it's a very low down payment compared to your Fannie Mae and Freddie Mac options, a little bit more flexible in credit. You can go a little bit higher in your debt to income ratio. And, people assume, sometimes they think FHA means first time home buyer, which is not the case, but it's just, affordable housing. But I guess from you looking at this and watching trends, why is that such a big deal? Because you can see right now, that's a huge part of the market right now. And you shared early today, kind of an interesting stat about first time home buyers, but big jump, huge jump in terms of government activity.
Yeah, it is. And it's not surprising. I think in the market right now, it's about affordability.
Mm-hmm.
It's difficult to qualify for a mortgage because rates are high. And so I think that FHA loan becomes a little more attractive.
Yeah.
Like you said, it can go up to a higher debt to income ratio than a normal Fannie Mae or Freddie Mac loan. Those guidelines are a little less stringent, a little more flexible, less down payment. FHA loan is 3.5% down. Most conventional loans are at least 5% down. There are some 3% conventional loans, but the rates are much higher. So most people go to that FHA down payment. So yeah, it's an interesting stat. It's something to look at. We definitely are seeing a lot more of those opportunities, and also it's still very much a first time home buyer market.
Mm-hmm.
People don't want to leave their existing low rate if they have an existing mortgage. They don't, and even though they may want to buy a new home and would love to have a bigger home and a newer home, they just aren't making that leap just because rates are still high. And it is interesting though. It's good to see for us in the business that, hey, applications are up. People are still buying, although there are some headwinds with, higher rates and low inventory, but it is encouraging. I like to see that activity. We'd rather see people trying to find a way versus not. So,
well, I think it's interesting too. 2 weeks in a row, applications up, even with all the stuff that's been going on with China's trade war and the Fed and all that stuff. So I think that just kind of shows that buyers are still out there making moves, even though there is the chaos. Because I think that's the tough thing sometimes when you look at, or CNN or Fox Business or wherever you're getting your media from, it's always doom and gloom about the housing market. There's not really a whole lot of positivity there, but if you look at the numbers, people are making moves. And I even just think of the FHA loan in general because, right, if a lot of these people are first-time home buyers, what do a lot of these people have? student loans, probably just car payment,
Mm-hmm.
like just the normal things of life when you're in that age group. So, if you're out there looking, like there's an option out there because you can go a little bit higher on your debt to income ratio. So even though you do have those things, and also co-borrowers as well,
Yep.
to offset that as well.
Yep.
So interesting thing right there. What was the percentage you said this morning of first-time home buyers? And
about 42% of purchases are first-time home buyers, at least for this year. Last year it was about 32%, 34%, I think. So it's up. It just shows you that that's the buyer out there
crazy
is a first-time home buyer. And surprisingly, as we see in the business, first-time home buyers sometimes actually have some money. I mean, despite the assumptions out there, there are people that haven't bought for whatever reason, and they do have some money. So, but yeah, that's who the majority of homes are being bought by first time home buyers. Yeah,
it's really insane to think about that because it means almost 50%, almost half of the market is first time home buyers.
It's crazy.
And just so people know too, that means you haven't owned a home in the last 3 years.
Correct.
So there are some interesting things you do that we're talking about, like divorce decree and stuff like that this morning. But basically, if you have not owned a home in the last 3 years, you are a first-time home buyer. So if that's you out there, maybe you did own a home, then you're renting or whatever the case may be. Maybe you're a spouse, and you guys were living together, and one individual was on the mortgage and one wasn't. Like there's some things you can take advantage of there as well.
Well, and the reason first-time home buyer is important to have that designation, if you do, just so those are aware, is there's certain benefits. You can oftentimes get a better rate. There's other programs that might be more specific to first-time home buyers. So to have that designation can be an advantage when you're trying to buy a home and get more favorable terms or
down payment assistance programs, closing cost assistance.
Yep. So there's things to consider too. That's why when we talk about first-time home buyer versus not, there are some differences.
And it definitely opens up the funnel.
Yeah,
for sure. Any other thoughts on there in terms of your wisdom?
No, I just think again, my opinion on why there's been some increases, prior to 2 or 3 weeks ago, there was a lot of noise around tariffs and what's happening there. And not to jump ahead to what you're getting to, but I think it's that there's the uncertainty has kind of come down a little bit because, okay, we know there's this 90-day pause on the reciprocal tariffs, right? And so that's been, okay, now I've got 90 days and things should be pretty status quo and things should be pretty mellow. So let's go ahead and move forward. Where I think there was a lot of uncertainty about the huge shifts in the market when Trump was talking about the tariffs and raising the tariffs, and all the noise around it created high volatility in both the stock market and the bond market. And so I think a lot of people were sitting on the fence, kind of waiting to see how things played out. Now that we're a couple weeks past that, it's kind of not surprising to see a little bit of the comfort level from the consumer. Okay, I'm okay now to move forward. I think things are going to be a little bit, more mellow going forward. So just my opinion.
Well, I'd be curious to know too, do you think people at this point are just kind of like, because we've heard the whole rates are lowering for years at this point. You think some people are just like, whatever, like it is what it is. Like, it's just kind of like,
something
I'm not going to put my life on hold here forever.
Something I talk about a lot is, this phrase of date the rate, marry the home, right? Rates change, rates go up and down. I mean, that's evident over the history of mortgages. And so, don't let a higher rate be the reason you're not going to get a home if you can qualify. Look at home appreciation over historic times. Values go up. There's equity that you can get. Rates come and go. So, don't let that be the reason. If you're waiting for rates to come down just because you want a lower rate, don't let that be the reason. If you can qualify, if you can get into a home, do it. And if rates come down, you can refinance and get a better rate. So I just think people need to understand what options they have and be more confident with, hey, you do qualify, you're pre-approved, you can afford this payment. Let's get you in a home. And
I think interesting too is we're both pretty analytical people, so we're always looking at numbers and stuff like that. But I think when you're buying a home, it's a lot more than just numbers. There's the emotional piece too.
Sure.
You're closer to your kid's school. It's got the backyard for your kids. It's whatever, like, you know what I'm saying? It's not just like the rate or the payment. Like, obviously that does matter, and that's what affects your overall cash flow of your family and your individual wallet. But there's things outside of that besides just the payment, the numbers. Like, obviously we're not talking like don't go in over your head. But at the same point, like, are you just going to put your life on hold forever because the rates aren't going to, like, I don't know. That's just
Yeah.
my takeaway. Like,
Building a home and building
Yeah.
a legacy
Yeah,
is
like
a lot
it's-
easier to do in a home versus an apartment complex.
exactly,
You know,
exactly.
so
Or
yeah,
even like if you're in the home you want right now, and it's like you have those dreams of moving up and doing whatever the move up buyer, like how long are you going to wait there? I just think of that because I've talked to clients like that, and I get where they're coming from. But at the same time, it's like, isn't those needs of your family important? Like, isn't that something you want to also move forward?
Yeah.
I don't know. Interesting to think about.
Interesting to think about for sure.
Not right or wrong, but anyway, just some food for thought for people.
Hey, I like this painting you got here. What's this? Little addition to the podcast.
Yeah.
Let's keep it in here. I like it.
Yeah, I think that's a Zion's team outing right there.
It was a team outing. We did a little paint night. So
Well, and honestly, don't take mine bad, but my mountains were horrible compared to there. I did not get the technique there. What did she say? It was the big brush was like Big Papa, and the little one
is that
was
what she said?
it was Little Brother or something like that.
Yeah, I like it.
Yeah,
We'll do that again. You can improve next time.
yeah,
Practice makes perfect.
yeah. If you have employees or teammates that are all over the age of 45, this would be a great activity to, I don't know, bond and stuff like that.
Over the age of 45.
Yeah.
Well, that's not you. Okay.
Everyone but me.
Okay.
All right. Oh man. Article number 2. The Federal Reserve holds interest rates steady. What that means for credit cards, auto loans, mortgages, and more. And essentially, I wanted to bring this up here and just kind of summarize what does that mean for the real estate market, auto loans, stuff like that. Because so for people who don't know, the Federal Reserve, they meet and they have a meeting about what's going on in the economy, and they say, hey, this is what's going on here, and we're going to make adjustments to the federal fund rates according to whatever's going on. And right now, for the last several meetings, there has been no cuts. They have not changed the target rate. And, what does that mean for us? And I want to break it down because I think there's a big misconception. Like back in September, when there were some rate cuts, people are calling, hey, I thought my rate came down. And it's interesting because it's just almost like the media lags. Well, it does, but the media lags the pricing that's going into loans because the loans have already been priced in for that prediction. Like the people who are pricing loans are pretty smart people and they're not waiting for that news to come out. But you know what I'm saying? Like when the federal funds rate got cut last time, interest rates spiked the very next day. Why is that? How does that do anything? And like, I guess the correlation between that, because some people assume that if the federal funds rate goes down, that automatically my mortgage interest rate is going to go down. And I think sometimes people will just imagine that your rate's going to go from 7 to 6, and it's just not.
Yeah, it's an interesting calculation, and there's a lot of factors that go into how the federal funds rate, which the prime rate you call it currently is 7.5% today.
Mm-hmm.
How the Fed, Chairman Powell deciding to cut or increase, how that impacts mortgage rates. And I think you hear rate and people are super sensitive to mortgage rates, and they assume that when the Fed does something with the short-term rate, it's going to impact mortgage. Now, historically speaking, it typically does. So when the Fed, 2020, 2021, when the pandemic happened and the Fed funds rate went to basically zero, mortgage rates followed and mortgage rates were down. And that typically is what happens. So historically speaking, as you follow, we use the 10-year treasury rate as the indicator. When you follow the 10-year treasury rate, mortgage rates typically lag behind and follow. Well, what happened back in September when the Fed started to cut rate, it didn't have an impact on the bond market, which had an impact on mortgage rates. So it is a little bit of an anomaly right now, how to predict that and how to know what's going on. But right now, because the Fed is not adjusting the Fed funds rate, what happens in mortgages is going to not be dependent upon that. It's going to be dependent upon the other data in the market. What's the jobs report looks like? What's the, other indicators in the market that come out? That's going to be more impactful on mortgage rates than what the Fed does with the short-term rates. So that's something we watch a lot and we see how it impacts. But it is a bit of an anomaly that there wasn't that rate improvement on mortgages like we expected there to be because the Fed adjusted rates down.
In your opinion, why do you think that was though? If it traditionally does follow the Fed's fund rates, why did the last time we cut rates? Why did it not? Like, what do you mean? What do you I mean, what's your thoughts on that in terms of why it didn't traditionally?
Again, I think it's because of all the other data in the market,
Right.
not just what the Fed was doing.
Mm-hmm.
I think inflation has an impact on that. Inflation had continued it started to come down and improve, but again, there was other economic factors. What determines whether or not mortgage rates go up or down is really what happens in the bond market.
Right.
So are people investing in bonds, specifically in mortgage-backed securities? If they are, then that means rates will come down because there's more investors that are buying into that. When people are not investing in the bond market, they're typically investing in the stock market.
Mm-hmm.
So when the stock market does well and the Dow Jones is way up and people are putting money in the market, they're not putting money into a bond. A bond is a more long-term, secure, safe investment where you're going to get a less return potentially, but it's a fixed return. You're going to get your guaranteed return on that.
Right.
So, whatever's happening in the market, if people are putting money in the bond market, mortgage rates can improve. If they're not, that's where mortgage rates go up. So with the Fed cutting the short-term rate back in September, that didn't have an impact to where people started to, okay, great, we're going to go buy more bonds. Rates are going to come down. That didn't happen. The stock market actually rallied and had, improvement. So people put money there. So that's kind of how it happens and how it determines the rate. So it is a misconception. The federal funds rate does not determine what mortgage rates are in a perfect scenario.
Right.
Although historically it does trend that way. So it's kind of an interesting 6 months to see how things have been impacted based off what the Fed's doing. So
Yeah, and I guess the only thing I would add too is those things are going to affect all their financing too. So personal loans that you're getting into the bank, your student loans, your car loans, your credit card loans. So all those things are affected too. It's not just the mortgages.
Yeah.
Right.
So when rates come down, you know, if you have a home equity line of credit, your home equity line rate's coming down, and you're going to buy a car loan, your car loan rate's going to be lower. So there are direct impacted things that are for the positive when the Fed cuts rates, not just mortgages, but everyone assumes they follow each other. And they just don't necessarily all the time. So
Right. And I guess what's the philosophy behind lowering and increasing the federal funds rate? Like if the federal funds rate is going down, it's because the Fed thinks X is happening. If it's going up, they think.
Yeah, again, I wish I had the perfect answer to that because it does depend. But
because like at COVID here, I've got a graph here went all the way down to like down to.
It's really about inflation. The Fed wants inflation to be at a 2% rate, right? So that's really the main benchmark of where if the economy is at a 2% inflation rate, that's where we're in a good spot. It's not too high, it's not too low, and so the Fed is trying to influence where inflation is based off of what the short-term rate is. And so if they feel like cutting a rate will get us closer to that 2% inflationary number, that's what happens. Well, inflation was so high, 2023, 2024, that's why the Fed was raising rates because they're trying to force inflation to come down, and it wasn't. And that's what was so confusing is historically, if rates went up, the Fed rate went up, inflation would come down. Well, that wasn't happening. So that's been the constant battle the last 18 months is trying to get inflation down to that 2%. I think it's at 4% now. So it's down from the 7 or so percent it was, but still not quite to that 2%. So even though there's all this pressure to the Fed to lower rates, typically when you lower rates, inflation goes up. So that's where it's, the math isn't really working out. So
Yeah, exactly. That's a lot of food for thought there for people to
that's a lot.
break down.
We can break it down a little more if there's questions.
Maybe go back and rewind that.
Yeah.
Maybe go back and check that out here. All right. Well, our last article here that kind of ties into that in terms of the federal funds rate is CNBC Daily Open. Is a trade agreement between the U.S. and China a Trump put? And essentially what happened this past weekend was the U.S. and China went to meet and negotiate because the T word has been all over the news in terms of what's going to happen. Are we going to get an agreement? And long story short, there's a 90-day reciprocal tariff that's been in place, just basically pausing things. And that's putting things on idle a little bit here, right? And once that happened, like the stock market went crazy and interest rates actually went up again. Because again, you were talking about people put money from bonds to stocks, and that's why that inverse relationship happened there. But let's just touch on that because that is if you just say tariff, that is everything that's on the news right now. And why is that affecting the federal funds rate? Because at your point there, they don't know what to do. Well, this is a big reason. That's what Jerome Powell said. Hey, well, we don't know because we haven't had any action being taken. So how are we going to make a decision when this is uncertainty and we can't make a like market indicators to tell us what to do.
Yeah, so there's kind of short term and long term. I think the short term impact of this decision was, okay, there's consumer confidence. This means kind of better global economy, global positive economy because of this pause. And so that created a lot of positivity within stock market. Okay, great. Economy is good, positive. Let's put money in the stock market. Companies' values are going to go up. I'm going to buy a stock here. It's going to go up to here. I'm going to make some money, right? That overall decision is what impacted the stock market being positive. That's why there was a spike. Well, interest rates have gone up on the mortgage side because it's taken money out of the bond market.
Right.
So I think that decision created some global confidence with the consumer, and that's where we've seen that short term impact. Now the long term impact, after the 90-day pause, we'll see how it impacts.
Right.
If those tariffs are implemented and that has a negative impact on the imports and exports and companies. I mean, it could be very volatile at that point. So that's kind of what the short term impact was of the tariffs. So it's going to continue to be somewhat volatile, but right now, impact of rates is going to be determined on the data, which is the jobs report, the CPI data, the inflation. How's that happening? So those kind of things. How many home starts? Those are things that are going to be more short-term impacted with what happens on the bond market and then mortgage rates. But yeah, that's kind of the impact of what this is talking about, I think.
Yeah, I think that's important to point out just because, people have so many questions there of how's that going to impact too. And I think it kind of brings up the point earlier too, like right now there is a lot of volatility. So I just go back to, like, if you're waiting for that perfect time, you're like, when, like, as you can see, there's always going to be these different things happening. And it's just kind of like, well, let's wait until the next thing gets ironed out. The next thing gets ironed out.
There's always something.
Because in 90 days, that's going to be another issue to get ironed out. And what's that going to do? Well, we'll find out. But that's, you know what I'm saying? That's another thing to
it's I think there's going to be this pent up demand response to what happens in 90 days, right? Okay, then is there going to be a huge fluctuation and then rates come down and people are going to want to buy? So, it'll be interesting to see. But again, I think the important message is, if you're in a position where you can get a home, you can qualify, don't sit around and wait, because what happens is, let's say in 90 days or 80 days, whatever it is, that, there is some impact when they do come to whatever final agreement it's going to be on the tariffs. And that creates some global uncertainty kind of from a macro level and creates some detraction in the stock market. And all of a sudden bond market rallies and now interest rates come down as a result of it. Well, now all of a sudden you have all these people, demand's going to go up. You're going to have a lot of people wanting to potentially buy. And, is there even going to be inventory to do it? So I think it's important to be careful what you wish for, because if you're hoping rates come down, when rates do come down, and they will, right, the demand's going to go up and there's going to be more buyers. Prices of homes are going to go up as a result. When there's multiple offers, prices come up on the houses. So don't be caught in that situation. And you may have to be because of your financial situation, but that's the risk of waiting if, things happen, because it can turn fast and the market can all of a sudden be very much a seller's market. Prices are going to go up. Demand's going to be high. So that's just something we're going to have to watch and see what happens.
Yeah. And I'm even just thinking here, like locally here in Utah, like we're a little bit different here where we're landlocked by the mountains. So as you can see, like that's a big reason I think why appreciation happens so much faster. I mean, obviously it's a cool place to live, but it's like there's only so many homes, and like in Utah especially, like the appreciation goes up so much faster. Like we drive around, there's construction, people are building stuff everywhere. But at some point, like that's why, like you just wait. Like look at the appreciation on that. Now, if we were in like the middle of Nebraska, right? What's going on in Nebraska? I don't know. The Huskers football team. I mean, but you know what I'm saying?
Yeah,
there's space to like do that. Where if you're in here or like California, like I was just talking to somebody yesterday who was in California, and basically they were saying like the only way that, I guess a normal just American purchase a home is they hand it down generationally, because once they get rid of it, it's almost grandfathered in, because it's, again, they're landlocked in California. Like there's only so many homes, like there's no really new construction you can do unless you go super far out of the city. Yeah. So that's an interesting thing, I think, to think about.
And you mentioned the Utah market. I think that's something interesting to bring up is, I think Utah is the second fastest growing state in the country. I think we're number 1 or number 2 in job growth. So from an economic perspective, Utah's doing fantastic, and there's jobs, there's opportunity, there's people are moving here, and the population's growing. But it's also a curse because our prices continue to go up,
Right.
and there's not a ton of inventory. And like you said, when there's not a lot of inventory, then you have to build, right? You can build a house, and typically building may cost more. So there's just a lot of factors there, and but Utah's a great place to do that. And if you can get into the home, you're going to see value.
I'm even just thinking convenience too. I mean, how many people do you know drive 45 minutes to an hour, like here in Utah, to get where they need to go? Like as inventory continues to like diminish because people are. I mean, you're just like, what about the convenience there?
Yeah.
I mean, you got Amazon Prime, you got same day delivery. Like everyone wants the convenience here.
Yeah,
Like that's,
sure.
I think that's something to consider as well.
Yeah,
but
for sure. Yeah, it's
interesting stuff to think about because
easy to get around. Yeah.
I mean, obviously not. It's all like that in every market, but for sure here in Utah.
Yeah.
So,
what other questions? Is that it? That's good stuff.
I don't know. I feel like I'm on the spot now, just to drill you with some more stuff. I just pull the wisdom out of your brain. But no, I think this is something that we've kind of talking about, and this is something we want to provide, just education and stuff like that on more of a weekly basis here. Because yeah, I mean, if you're just going to work, doing the thing, and you're not, I guess, in this type of field, like how would you know? And I guess my goal is just to give it straight, a no BS filter of what's going on here. Because again, like it depends on what media source you're looking at. Like, are you really getting the facts of what's going on here? And, if you're a first time home buyer, I mean, there's a whole lingo you got to learn in terms of the actual mortgage stuff. But then when you combine that to what's going on in the world, I feel like for a lot of people I talk to, it's almost discouraging. And I guess the whole goal here is just to bring value to that audience. I mean, all, homeowners and, in general, but especially that population right now, because as you said, 42%, that's so just trying to help that market. And
well, and I think it's important to just be informed and educated
Mhm.
about it, especially if you're in the market to buy or you have a home and you're looking at it. But it's just good to know what's going on, and not that we know everything and we're experts at it, but we try to understand what's going on and how it impacts our world, because it impacts us directly. Rates have a big impact on our business, whether where people are buying or refinancing or whatever. So we want to be a valued resource and someone that can help people get educated and understand it, just so you can make an informed decision with what to do. So we'll try to do that and bring up data, and maybe we'll get our chief economist on here to help us, because it's good stuff. It's
bringing
good
the
to
big
have.
you're bringing the big guns.
Again, that's not our area of expertise, but we kind of have to be someone in the know of what's happening and how it impacts what we're doing. So
I'm just laughing because I thought of a question for you.
Okay.
Are you willing to reveal your cook process for this pork butt you're cooking here for the boys' night, or is that a hidden secret here?
Well, it's pretty basic, man.
Okay.
It's low and low. 225 on the smoker. I got my rub on it. I did Cholula as my binder.
It's not a bad
nice
choice.
Little meat church rub on
I
there.
know you're a meat church guy.
Yeah. So we'll see how it turns out. I'll give you next week. I'll let you know how the pork butt tasted. So
perfect. All right, you got it, guys. Fire up the grills. Let's have a good weekend. Thank you, guys.